Hi everyone, this is Michael Ben-Ghiat with Lifetime Investor, and this is the Stock Picks weekend review video for January 21st, 2023. Okay, let's get started right away. There's our disclaimer. And again, as usual, we're going to talk about the current market environment, the stocks on our portfolio review, review the stocks on our portfolio. That's what we're going to do. And then we're going to go over the stocks in the watch and ready list. Okay, so starting with the overall market. Last week we did change our overall environment indicator to yellow, but I would say just from the action this week is we're kind of a little yellow red, I'd say. It's just not acting. Again, it's been the sort of a broken record for months and months and months. But it's improved, but we're just not getting that change of character yet. And we'll talk about that more in a second. So the best strategy still is just very short-term swing trading. We're not getting any moves of beyond a few percent for the most part. Very few stocks have moved up, 20, 25%. Even 10% is like a big winner these days. So we're keeping our stock exposure low. Because it's up to 20%, even less than that since we had 4 positions on. We lost 2 of them due to volatility. So what's happening is the money's still, again, flowing back into the beaten down tech stocks, the former leaders of the previous bull market, which went on for many, many years. And the money's just flowing back there. But for leading stocks, and when we say leading stocks, we're talking about stocks that are not in downtrends, making new lows, and the people are bottom fishing them, just trying to get them. We're looking at stocks that are making new highs, that are outperforming the market, and the ones that are going to be some of them will end up being the big leaders of the next bull market. So we're always trying to find those, not stocks that were the leaders. And historically, past leaders almost never turn into the future leaders. There's always a new crop of leaders that come up that, in some cases, take over. They usurp the former leaders in terms of their sales and earnings, and new talent comes around. So that's what we're looking for. So we're just not getting that, and ultimately, it's showing us that the institutions are just not stepping up to support stocks. Let's take a quick look. Let me go to the charts. I'll give you we had a position in TK. Again, this is an inexpensive stock, so you kind of do expect some volatility, but you can see this out of character. One of the reasons we got into the stock, it had a nice tight pattern that was forming, and had some volatility, but it came right back, and it tightened up, and then we bought it as it broke out. But you can see the breakout lasted one day, and then we had this big down day, almost an outside day. It didn't quite make a new high, but it came down and closed at the low. And then we had a big, just volatile day on Thursday. And then it came ripping back on Friday. So, but if you look at the past chart, you don't see a lot of that. It's just tighter trading going on. We had some up days, these, good days here, but they're up days. And so, of course, you're looking for that. We just had one over here, but yeah, this is out of character, but this is the character we're seeing over and over and over. The other one was Toro, ticker is TTC. And again, you'll see what happened here. We had a breakout here, which we had bought a few days. It was trying to break out, but you can see we're closing in the lower part of the range. Just like sellers were just, every time it was getting up to 116, 117, sellers were appearing, and it just couldn't hold. And then we had really some ugly days, and it broke down below the 21, and then we just cracked the 50-day on pretty strong volume, and then we didn't even see any kind of recovery on Friday. So this is just so typical of what's going on, and this shouldn't be happening in a good market. These breakouts, on balance, they'll just go and they take off. And in fact, if you're looking at this one, here's an example. We had a little cup here, kind of tightened up a little bit here, and then broke out, and it just went. look, this is what you'll see in a good market: a bunch of up days in a row, closing near their highs. We had, of course, a little pullback, but just for a few days, and you can see just it only took a few more days when we were back in new high ground. But now that we sort of got up to this level, it just wasn't able to hold, and this is just happening over and over and over. So you can see we're just not getting that character change. So, okay, so let's go ahead and take a look at the rest of the stocks. So these two were on our list. We got kicked out. Minor losses. We're not putting on a lot of exposure. So we're really nothing that would hurting our portfolio. I think we're down maybe 0.5% or something like that. Easily recoverable when the market turns good. But that's what we do. We don't pile in. We're always taking, gradual exposure. If we put on a position, or even sometimes two, if they're working, we'll add more. But this is what happens. They work for a little bit, so you add a little more exposure, and then they stop working. And in the past, we would get stopped out of all of them. And so then you start over again, and then you're in a little bit, and we just haven't seen, week after, even a few weeks of good action. It's been a few days usually, maybe even a week, and then it just turns bad. So that's the issue with this market. So that's why we creep in, and we've been creeping right back out with small controlled losses. So here's Chevron. This is one position. This one's acting really pretty good, and the two positions we have left are both in oil and gas, and they have been acting pretty well overall. It's one of the leading groups, and sort of the bigger cap ones. Chevron, of course, is 350 billion market cap. So the money's been kind of flowing to the bigger companies, and we got sort of an early buy here. We had some real tight trading here in the middle of the base, and we bought it coming out of this tight area here. And then in a good market, or maybe it'll happen in this market, now that we're in, if we don't get stopped out, it'll run back up to the top of this, and hopefully we'll get a little, this is just forming a cup, but ideally it'll form a cup with a handle, and then we can actually add to the position. I don't remember, I think this may be a half position. Even if it's not a half position, we could go overweight on it. If we have a decent thing, then maybe take off a little bit and come back down to a normal position. But that's what we're looking for. But it's been very rare to be able to add to a position, because we're not even getting the first position to actually work well. But this is looking pretty good. We're getting a little bit of volatility here, which is okay. Unfortunately, we have earnings coming up in 6 days. We're basically flat on the stock. So we may be forced out of it just because, or we'll sell down to a little tiny position just because we don't want to be going into an earnings in this market without any cushion. It's just, sometimes you regret it afterwards, but, we do it because we don't want to be taking big hits. And that's just part of trading. The next one is BP. Again, this is the British company. This one, same thing. It's kind of, we got in this sort of, it's sort of called a cheat. We're kind of cheating as we're getting in a little earlier than the top of the base. Let's see, we bought this at 35.46. Yeah, we're basically just up a few cents. And so it tried to break out here, closed at its lows. It's acting okay. It's nothing wrong. It's just consolidating up here. Again, this could be one that if we can get it to break out to new highs above 36.11, we could add to the position. Again, and earnings are in 17 days, so we still have a little bit of time in that one. And this is always the problem when you're in earnings season. You try to put on positions, and sometimes they just don't go, and you end up having to get out because you just don't have a cushion, and especially in this market. Okay, so let's go to our ready list, the growth stock ready list. So the first one is SciPlay. Ticker is SCPL. I'll go kind of a little quick here because we have about 10, 12 stocks in total to kind of go through, so I don't want to make this video too long. SciPlay has been a difficult one. I think we were in this. You can see it tends to try to break out. Even this had a nice little tight area. I went up just for a few days, really crashed, came ripping back. Just I think here was one would have stopped you out. So it's been a little bit of a choppy trader, but it's starting to try to break out of there, and we're just clearing this 1620, 1625 area. And we're at the top of our buy range, which was 1616 to 1660. So it's acting pretty well. RS is 92, which is okay. It's in the top 10%, but it's been a little tricky. It's just not one that just really just took off. You can see it just was floating around between in the 16s and 15s. Every time I tried to get above, it just came down. But we're starting to move up now. The market's moving up. But volume is, this whole move here has been just a little bit low. A little concerning there. In terms of earnings and sales on the fundamentals, the last 4 quarters, earnings have been negative, a little minus there. Sales have been okay. But you see in the annual earnings, seems like we're really starting to come back up and jump up again. So it's one to watch. It's one of the few sort of, it's a software company for digital games. So it's one of the few kind of tech stocks that's actually, appearing on our lists. Okay, the next one was BP, and we have Chevron, so we're going to skip those since we talked about them. The next one is Dorchester Minerals. Now this one has been acting pretty well. Oops. Helps if you type it in correctly. DMLP. Now this is a master limited partnership, and some people don't like trading these because you end up getting K1s. They do yield nice dividends for the most part. This one's over 11%, and since a lot of them have been holding at 11% for a long time, it's really had very strong earnings, so that's supporting the dividend. But this one, you can see it's a classic Titan that we're always looking for. You can see here we had this big decline here, kind of got tighter here, got tighter, and then unfortunately it failed, and it came back up, which is what happens in this market. It's just very tricky. And then we kind of got tighter, then we tightened up here, and we tightened up, and then we finally started to move out, break above this 31 level. And that just happened on Friday. And our range is, we're actually just out of the range. It's still buyable. I'm going to update that, but a little bit farther, you're kind of already taken off. Now again, because this is it's a pretty thin stock, and you do end up with getting a K1, and it has more problems in terms of taxes and having to deal with that. And so some people don't like trading these, but they are good yielders. So that's Dorchester. We have one final one, and that is McGrath Rent Corp. MGRC is the ticker. And this one is a little bit of a puzzle, and it's kind of broken down, which is unfortunate. They just have like relocatable modular buildings, test equipment, and hazardous waste containers. And I haven't been able to really figure out what that synergy is to a company that kind of has. I don't really see the synergy between those products, but what do I know? It's a little bit on the thin side stock, and they basically are leasing these products. And it looked like it was tightening up here. It had a nice, pretty good looking chart. It got really volatile this one day, and I'm not sure what happened. And unfortunately, we broke down on Friday. We're still watching it, but that's not a good sign. This is just showing more volatility. We always look for less volatility. That's the key. You can actually see like right over here, we kind of tightened up, and then we had a big blast off. And that became the path of least resistance, was up. But when we see this, you start drawing this kind of thing. You're getting the opposite. We're getting the megaphone, more volatility. So this needs to quiet down, and before we would actually entertain buying it. But at this point, if it breaks down much more, it'll just go off our list. It just wasn't working. For the longer-term outperformer portfolio, we've had very few stocks just because of the nature of the bear market. Just kind of killed off most of the good ones. And this one's CBIZ. We've been watching, but it's just been very volatile. So it's been in and out of the buy range. We're currently in the buy range. Now we're actually buying this off of the 20-week moving average. It's got a little hard to see on this chart. It's this green line here. But you can see it's been kind of going up to the 10-week, back to the 20-week. So it's just, though it is ready, it's just been going back and forth. So a little too much volatility. So we haven't bought it for our portfolio. We're just leaving it alone. But it's it's the only one that we found is on the ready list. But not ideal. You can just see this kind of trading is it just kind of chops you up. So we're leaving that on, but we still leave them on the list because we want you to kind of see what we're looking for. And it is buyable, but you just have to maybe position size accordingly. You wouldn't put on a giant position, this kind of thing. You'll just get probably chopped up. Okay, now we're going to go to the watch list. The first one is Manchester United. That's the soccer or football team. Now there are rumors that it's being sold. That's why we had this big jump here, but it's still trading and it's starting to get really tight. You look how tight this trading got here on pretty low volume, and it kind of broke out on Friday. But our buy range was to clear this whole area here, and we're just not there. We're very close, 23.45 to 24. So we went into that range on Friday, but it kind of pulled back. But nice tight trading, so it's looking pretty good. But this is one you might want to look into a little bit more in terms of what's going on. It could be that it's still under play, but if that the risk would be that if there's already some kind of a offer on this and then it falls out, then you just see the big plunge comes. So we'll see, but that's one it's acting really pretty well. And we like the fact that it's capable of making these big moves. Okay, the next one is UFPT. UFPT, that is UFP Tech. And they make engineered components using laminating and fabricating technologies. I haven't done any research on this company, so I'm not sure what exactly they are doing, except for that. I do show that they're in the containers and packaging industry, so could be that's what now that I've noticed there's quite a few packaging companies that seem to be doing pretty well. Now this is interesting because our annual earnings are really we like this. When you see here's the annual earnings chart over here, and you'll see that 2015 did 17, he was earning around $1, $1.10, $1.26. Then we jumped up to $2, and then we kind of float around there, a little bit dip in 2020, which was normal, back to $2. And then suddenly we jumped up to $4.46. So the earnings doubled in 2022. And a little bit of a dip, but still, this is now jumping out of its normal range. So something's going on. And if you look here, you can see that the earnings really have started accelerating, and the sales. When look at this, in fact, we have, we actually called this a code 33. I won't go into exactly what it is, but what we're getting is 4 quarters of increasing sales, earnings, and margins. So you can see a little bit of minus earnings, then 1689, 412. Now, sometimes when you see these big numbers, you think, okay, because it was going from a penny to 2 pennies or 3 pennies. But this is 50 cents to 2.56. So there's some serious earnings, and the sales too, 25, 47, 86, 91, accelerating, and the margins have gone from 5 to 20. That is a huge, huge gain. So there is definitely something going on here that you could take a look at in terms. Maybe they've been buying other companies. Maybe they did a big purchase acquisition that added a lot of new business to there. Now it's a thin stock too. It's only trading 70,000, so you have to be a little bit on the caution side there. But we're starting to see the volume is increasing here more and more as it's going up. And again, we have this little tight area. We're trying to break out of this, and our 118.80 is our buy range. So we're basically clearing. I can't really. And this chart's I can't really get super tight and show you, but it's clearing most of this area here. We've had a few spikes up that haven't. So we want to see it kind of tighten up a little bit more, ideally right below, right around this price, and then blast out of there. So, and then RS is 97, so it's really good. So this is one that's, fundamentally and technically it's setting up, and it's looking like a very strong stock there. So, okay, let's move to the next one, which is Genie Energy. A little bit on the low price side, so, but it's got some good numbers. We're just looking to see this one break out of right up here. I mean, in my other charts, we've had just a couple of days that of, let's see if I can draw the line. Let's see. Yeah. So we're basically here. And you can see we just had a few days where we got above here, but we're getting all the action sort of banging its head at about 1103, 1104. 1104 is our buy range, our bottom of our buy range. And so we want to see this ideally continue to tighten up right below here and then break out. Earnings and sales, the earnings have been really strong, but the sales have been a little weak, and the margins have been increasing too. So, but overall, I mean, they're basically a utility. So it's not like the company is a big growth company with huge gains, but and they're let's see, yeah, they're a small cap, 269 million market cap, a little on the thin side too. And they serve, they do electricity and gas in just a few states on the East Coast. So, but it's setting up nicely, and it does have a history. It can make a big move. This from February to August, this made a 100% move, just about. So it doesn't matter. And so, sometimes these low volume, daily volume stocks, when they get a little bit of people coming into them, they can really make some big moves just because there's not a lot of shares. And if the demand's there, these can really start taking off, pretty quickly. Okay, next one is Cardinal Health. This has been on our list for a while. It's starting to kind of just drift off here. So and the RS is starting to drop. You can see we're still in the 90s, so that's good. But you can see the RS line is starting to underperform the S&P. It was kind of, see here, it's kind of tightening up right around 81, and it just now has drifted off to 75. So this one, it's getting close to saying goodbye, taking off the list. But and earnings are in 12 days. We'll see. Another down day, and that one will take it off. It's just not acting all that great. But it has potential. You never know. They come right back sometimes, and they look bad one day, and then a week later, and they look fantastic. Okay, final one is TJX. They operate close to 5,000 TJ Maxx, Marshalls, and home goods stores. Now this is very common. What's been happening? We kind of came up this cup, formed a handle. Now this is instructive. In the handle, we had some little shakeouts. Here we sort of made a new low in the handle, came right back, a couple of little dips down to kind of scare out the weaker hands, and then we broke out. Nice breakout, except for we had no volume. So that was a little warning there, and it just kind of hung there on low volume, a little bit increasing volume on the downside. So this was a little bit of warning, wasn't the strongest breakout. There was no follow through, and then we broke back down below the buy zone, and we got support of the 50-day. That's the red line, and that was on Friday with the big volume again was a little skewed. We talked about this market trend advisory. It was skewed because we had a lot of options expirations that just put a lot of volume in the market, but didn't really show that there was a lot of support really going on, just because there was just the trading going on and the rebalancing with the option trades. So the fact that it bounced up the 50-day shows that there was a little support there, but we need this to tighten up again. Again, we're getting this kind of megaphone effect. Let's see if I draw that back in here. Yeah, we're starting to do this, which is fine. That we like to see. This we don't want to see. So now we're getting too much volatility, and But again, and that's it. That's the last one on our list. There's just not a lot of new names too. That's the other side of this. One of our trend templates that we use for our screening is still under 200 stocks. So those are the warning signs. We're just not getting that change of character. We're not seeing a lot of stocks setting up properly. And the ones that are doing a lot of this. The breakout lasts a few days, and then we're getting the failures. In some cases, they break down enough would stop you out if you were in it. And we're just not seeing very few stocks break out and then have just gone up and made really nice moves. We're just not seeing it, just a lot of volatility. So that's why we're just keep your exposure low. We're not there yet. This market can go either way. We just have... That's in the Market Trend Advisory video I just talked about. It's a dangerous time because we're just in that. Is it going to turn into a a bull market, or are we still in a bear market? Now we are in a bear market. And the trend is still in there, but we're in that transitional phase if it's going to happen, and that's where you get all this volatility. And the volatility is not our friends that you don't want to be, piling in and getting chopped up. And that's what so many traders did last year. Doing the bottom fishing, trying to buy these stocks that, were 500 and now they're, 125, and they think, what a bargain. And of course the stock drops to 50 and then it drops to 25. And so they're just getting, killed, but they're thinking, oh, these are just bargains now. Well, they can go to zero, so you have to be real careful. We have the opposite thing here. We're just getting the breakouts on very strong looking stocks, the leaders that are making new highs in a bear market, and they're just not able to go anywhere. There's just no institutional support, and so many stocks. And this is a pretty big stock. It trades 5.6 million shares a day, and you can just see the institutions did not step up to buy this when it was making a new high. They weren't there. Look at the volume. There's no volume there, and then it just took a little bit of selling to come in and knock it back down. So that again, so what we're always looking for is that tight trading, and we want to see that change of character where we're seeing breakouts work and they continue up and they don't test you, and it's like, it's easy money. You buy something and it just goes up, and you're not going, oh, it's now negative and I'm getting stopped out. So that's the first thing, and we want to see a lot of stocks setting up, and we're not seeing that at all yet. So, and that will, between those two, that's really... It doesn't matter what the indexes are doing. If you're trading individual stocks, they could be flying in, but if these leaders are just not working, that's telling you something. And usually, a lot of times, leaders aren't working, but the indexes are. You're going to see the indexes reverse also. Okay, well, that's it for this week. We're a little long, but I hope it's helpful, and we'll be back on Monday. And then we'll be back next weekend for another video. Okay, thanks a lot.